Smart24, driving business.
A very good morning, ladies and gentlemen, and welcome to the program. This is Financial Markets. Welcome back from Smart Means Business, and of course with Jen Kasumba there and the whole team bringing you the morning update. Now we are here and we are here to get you through what is currently happening in the realm of financial markets. My name is Anthony Sebali and I'm with
Victor Chiberu.
And both of us here and the team are ready to drive you through what is currently happening. Some of our big stories coming up on the show is COMESA's approval of CIPLA acquisition, rather CIPLA buyout by Africa Capital Works. We also have a story from NSSF, which is actually looking at acquiring over 26%, recouping 26% of the invested 199 billion in the Airtel initial public offer. But before we go into that, just a humble reminder that Altex East Africa brings you the show, and with Altex you can buy or trade in the fixed income market in East Africa. Altex East Africa is saying you can do something new today by simply grabbing your phone and dialing *292#. Those digits will give you access to the trading market of the East African fixed income market. And what you can do also is to learn more about the products in case you would want to, using that USSD code. Also, Altex tells you that you can start your investment with as little as 15,000 Ugandan shillings, which is a deal breaker, especially in the market where most of the investors actually require at least above 100,000, but not so with Altex East Africa. Altex is regulated and licensed by the Capital Markets Authority of Uganda. Now, Victor, what do you have for us in Uganda Stock Exchange?
Well, it is indeed a fine morning on the Uganda Securities Exchange. We're seeing a lot of activity from CIPLA, from Bank of Baroda. But just to go deep into the figures, we're looking at yesterday's trading session on the Uganda Securities Exchange, leaving us with a total of 20,171,222 shares and corresponding to a market value of 330,166,150 Ugandan shillings. And that compared with the previous trading day, as of Tuesday, October 31st, today's data actually shows a 2% decline in volume and a 6% decline in turnover. So obviously this is leaving us at a market capitalization of 16 trillion, down by at least 1 point. And in aggregate, we're looking at 5 listed companies participating in the trading, and we ended with only 2 gainers as well as 4 losers. And the 2 gainers, of course, was CIPLA QCIL with a 7.69% share price appreciation. And we know obviously this is due to the news we've had about CIPLA within the past hours. Anthony, could you give us an insight on that particularly?
Well, CIPLA Quality Chemical Industries has finally been able to get a green light from COMESA, which was one of the factors that was holding back a buyout deal by Africa Capital Works, which is a company that is an investment company based in West Africa and South Africa. And we are seeing CIPLA exiting Quality Chemical Industries. However, when you look at the COMESA Competition Committee approval has been given without any condition, and a share purchase in which Africa Capital Works is seeking a buyout of CIPLA from CIPLA Quality Chemical Industries.
Well, the share purchase in which CIPLA will actually dispose of its entire 51.18% stake in CIPLA Quality Chemical was first announced in April and had been expected to be completed in May. But the transaction is actually delayed for more than 4 months due to regulatory approvals, and particularly from Capital Markets Authority and the COMESA Competition Commission. And this is where Africa Capital Works had sought permission to promote regional self-sufficiency by backing one of the largest life-saving drug manufacturers in sub-Saharan Africa through accelerating its growth both in Uganda and in the region.
And looking at one of the committee statements, the committee responsible for the initial determination determined that the merger is not likely to substantially prevent or lessen competition in the common market for a substantial part of the market. Now, when you look at Dr. Mohammed Momant, who is the chairperson of the three-man committee, he ruled on this transaction, noting that the committee had further determined that the transaction was unlikely to negatively affect trade between member states. Before, Victor, we had a conflict of interest here for African Capital Works that in acquisition of CIPLA Quality Chemicals, they would create some sort of unhealthy competition within the markets. Because remember, CIPLA, as a drug manufacturer, does supply ARVs, anti-malarials, diabetes drugs, and hepatitis B drugs to West Africa. And on top of that, we have quite a number of countries as well in the southern part of Africa that the company is currently supplying. So this approval was pending due to the fact that there was some sort of fear of the competition that will be rising from especially other pharmaceutical companies in the region. However, in a July notice, COMESA had invited stakeholders, including competitors, suppliers, and customers of the parties, that is including markets in Zambia, Lusaka, in Zimbabwe, Malawi, and the like, from within and beyond the region to give their opinion on the proposed acquisition of the sole control by Africa Capital Works of CIPLA Quality Chemicals.
COMESA, under the rules on determination of merger notification and thresholds and method of calculation of 2015, it examines mergers or acquisitions to avoid circumstances or creating anti-competitive mergers. But the COMESA Competition Commission had sought to understand whether the acquisition would not disable or tilt the market in Africa Capital's favor, given that the company will, of course, remain active among COMESA member of states of Uganda and Zambia and Kenya, and where it has market shares in the pharmaceutical markets of approximately or less than 15%. But looking back all the way from August, people familiar with the matter had actually indicated that the takeover deal estimated at between 25 million US dollars, which is approximately 93.3 billion Ugandan shillings, and 30 million US dollars, adding up to 112 billion Ugandan shillings, would actually require extension of the transaction date for the third time to allow COMESA complete its investigations before granting regulatory approvals in a deal which CIPLA would actually dispose of its 51.18% stake in CIPLA Quality Chemicals held through CIPLA EU and Meditab Holdings.
Well, finally, the deal will see CIPLA exit the drug manufacturer that has been CIPLA Quality Chemical Industries from 2015. That is when CIPLA actually acquired this 51.18%. However, according to the Capital Markets Authority, when they were sought after which information they were actually having concerning this transaction, they indicated that they had already sent their approvals by by the month of April for the transaction to take place. Victor, finally, this deal is coming to an end, which is something we've been looking out for. Investors have been up and down on CIPLA, especially the stock has also been quite stagnant. If you recall back in 2018 when CIPLA was listing, it came in at a high price compared to most of the listings we have seen, at least on the stock exchange, with a price of 256 on the IPO. The company fell over the price when listing on the secondary market to now an average of 70 shillings. So hopefully this acquisition will see also an improvement in the stock performance and also liquidity as well on CIPLA Quality Chemical Industries. We have to take a very quick breather, and when we return, Victor, we look into other top gainers. That was only CIPLA Quality Chemical Industries, but we do have also the MTN third quarter financial results, unaudited, of course. For now, we shall be sharing with you what to expect from MTN, especially in as far as the dividend yield is concerned, but also we do have another very exciting story from NSSF, which is expecting to recoup at least 26% of the 199 billion shillings that they invested in the Airtel initial public offer. My name is Anthony. I'm with Victor. We'll return shortly after this quick break.
Smart24, driving business.